Hello everyone, from Chicago, I'm Charles Brown, Portfolio Manager with CB3 Financial. As you know, our monthly CB3 Live airs every second Thursday of the month. During the month, there are always market-moving events that can affect your portfolios, and I want to keep you in touch with these events, especially here in this election year. So that's why we've created CB3 Live Update, which will be a series of audio and video short productions so you can get them in bite-sized manner, and we will keep you up to date to get you tided over to the next monthly edition of CB3 Live. So sit back and enjoy episode 1 of CB3 Live Update. Let's do it. In episode 1, we're going to look at what's happened so far in 2024 and look forward to what could happen in the second half of the year with the expectation that it'll be volatile. And the reason I say it'll be volatile is because it's an election year. Now, the first half of 2024 saw robust performance in global equity markets. Just last Friday, June 28th, the last trading day of the week, month, quarter, and half year, the S&P 500 and the NASDAQ both hit intraday lifetime highs, although they both closed lower off those highs. Now, the first half of 2024 was marked by significant merger and acquisition activity, and that's impressive because it was happening in the large cap space. And the continued influence of technological advancements, let me get that right, most especially in artificial intelligence, which of course continues to be the biggest buzzword in the markets right now. We had strong performance in the US, but it wasn't just in the US. Global market equities also demonstrated strong performance in the first half of 2024, with 34 of the 36 developed markets tracked by Morgan Stanley Capital International showing positive returns. Notably, the S&P 500 had its best quarter since 2019, building on the momentum that started after, you remember, we had that market correction ending in late October of 2023. So this robust performance is driven by several factors: inflation trends being reduced, of course, Federal Reserve policies sounding less and less hawkish, positive corporate earnings, and significant developments in generative AI intelligence. So which sectors were the strongest? Well, the technology sector, for sure. It's the largest sector at about 31% of the entire market, all right? And the key player in that, and indeed probably the most important stock in the world at the moment, is NVIDIA. So their stock jumped 88% in the first quarter alone. The energy sector also experienced notable activity, especially in U.S. oil and gas, with major deals making headlines. I happen to believe you're going to see more growth here, the energy sector, especially if it looks like the administration is going to have friendlier policies towards fossil fuel oil. Consumer good companies showed solid performance. Deutsche Bank had organic volume growth of 4.3%, which is pretty huge for a bank, actually. And the tech sector activity, again, surged 36% to 281 billion, primarily driven by buyouts. Only one sector of the 11, real estate, declined during this period. We haven't had investments in real estate in months. In fact, probably more than a year. Even overseas in the Hong Kong market, there were all kinds of activities and things growing there. Super Microcomputer, SMCI, which is also traded here in America, had a remarkable growth with 250%. We were in that stock for a while. We didn't stay for the entire growth, but it was definitely positive. As far as CG, we're up 22.5% on the year, easily beating the S&P 500. For those of you that are listening, I'm going to give you these numbers. For those of you viewing, you can see it on the screen. The blue line represents our benchmark accounts, and the other lines represent the various indices. But for those of you listening, I'm going to describe it to you. What we're trying to do in each of our programs is beat the market. If you look at a one-year trailing return, we're neck and neck with the S&P. So we had a bit of a pullback in the second and third quarters of last year, but we've caught up on that and feeling real good about that. GI, which is growth in income, was beating the S&P even though it's only 60% equities. until just the last few weeks, but we're still happy with its performance. It's only trailing the S&P by 3%, but only 60% of the assets are stock, so it's far less risky than CG is. And then, of course, there's DS, which is our supercharged AI and Magnificent 7 holdings, up almost 17, a little more than 17.5%, I should say. For those of you that are seeing it on the screen, you can see that blue line jumping around a lot. For those of you listening, DS, or discretionary strategies, is the most volatile program we have, but it's still doing quite well and beating the S&P 500 and its 6.5-year track record, up 317%. So it's maintaining this huge lead over the S&P during its 6.5-year lifetime. So what are we looking for looking ahead for 2024? So continued growth. All right, positive momentum in this first half is probably going to continue into the second half. We're already up 15% year to date in the S&P, and we're expecting that could continue, especially because we're in an election year. Earnings growth continues to project strong, and yet this momentum is allowing the market's PE ratio to come down somewhat, and what that does is reduces the risk of the market overheating. Sector performance, obviously, technology still very strong, energy strong, even consumer staples strong, because if inflation remains high, that's going to point to stocks like Procter & Gamble and other consumer staple stocks to continue to do well. I think the election impact is going to be significant as we get closer to the November 5th election. And investors out there are anticipating lower inflation and potential cuts by the Federal Reserve. I do see some potential for volatility. I think that's always with us, but especially in the summer months as we enter the political conventions, especially if the Democrats decide that they want to replace President Joe Biden with another candidate. I'm not saying, but I think that's possible. It is indeed a consideration from those within the Democratic National Committee, and that would definitely affect the markets. Amazon became, I think, the fourth $2 trillion club, market cap in the club there. So we have huge, large cap growth in this country, and I do see that continuing into the second half. I want to make you guys aware that we have a super special July CB3 live show on Thursday night, July 11. We're live with John Fountain, who is a solutions engineer with SentinelOne Cybersecurity. John and I are going to talk for 15 to 20 minutes, and it's going to be a really insightful program as to what's happening in the markets and what solutions are out there to protect all of us from cyber criminals. Don't miss it. Thursday evening, July 11th. And so that's it. That's the first episode of CB3 Live Update. We're glad you're with us. Expect at least one of these a week, maybe two, depends on what happens. Again, some will be video, some will be audio, and we hope that you'll continue to benefit from this. We're glad you're with us. We'll see you next time.